Good morning, everybody, and this is your S&P 500 day trade for today. So it is a new quarter, it is a new month, and it is a new week, and we also have a host of information coming out. So firstly, the Feds will be coming out on Wednesday telling us that they're raising interest rates as of immediately, which is what they've told us already. Market will respond to that and probably panic, maybe some more selling. But then also, you never know, it could be a case of the market buying into that news and having priced in the interest rate hikes already. So at the moment, there is a massive head and shoulders here. Here's your shoulder, head, shoulder. This area that we're in is critical, and I'm just going to do that. It is a bit of a zone, and there are three areas here. And we haven't quite got down to this area here. So that is kind of the setup that we have now. And we had a strong move up, one pullback, sort of one pullback, then a continuation move up, and then another pullback. So we dropped below this level to the left here, which is 41.30. Then I would expect a retest of that, and then a possible massive plummet. The other thing to bear in mind, and this often happens on the S&P 500, is what looks like a bearish head and shoulders often turns out to be a wedge of sorts, like that. So not a very strong wedge on the weekly. It's only sort of 1, 2, 3 touches. We're looking for 5 touches at least on a wedge for it to become decent. So just bear that in mind, because in my opinion is we're still in an upward trend, so you need to be looking for the opportunities to buy. It is getting a little bit tired at the moment, but that's kind of the situation we need to look at. Right, so look at the 8-hour short term, to complete different picture, right? So here we have moving average crossover, we have oscillators all over the place, nothing really here except there is diversion still between the two lows. We've got a bit of an inside bar forming here, which is to be expected. Can't see price dropping below this in after hours trade. So moved down. Last week was very much a big up, big down, big sort of weekly, almost a range, but not quite a range. It's a complete mess, to be honest. So what we're looking for is we're looking to see if we can find some structure, and there's nothing on the 8-hour. Nothing really on the 3-hour either. So I don't want to be short down here. There's too much, this weekly area here, there's too much support on the weekly. So for me, being short, you want to be short higher up, and I'm not going to do it on the high time frames either, but look for opportunities on the low time frames. And that zone there is my first one. Problem is I don't have a decent stop loss area here. So what I would suggest is any move into this area, go down to the 15 minutes, and we'll see if we can find some stop loss. So you don't want to be short here. Look at that. That's would be just silly. Okay, there's a fairly decent area. So you're looking for anything sort of around here for an opportunity to short. You've got a 270 point, call it 300 point stop loss. You're looking to be above this pin bar here. That would give you enough leeway, so it's a smallish position, and what you're looking for is another move down to test this low of 41.30. We get below 41.30, we're actually below this tail of last week, and come back and test it. So we break that tail, come back and test it and reject it, then you can assume that we are moving down to 40.60, 40.50 area, and that would be the next level to pay attention to. So not looking for longs, definitely looking to ride with the trend, and the trend is down on the 15 minutes. It's down on the hour as well. So we just had this little consolidation for most of last week. So you're looking for rejection off one of these tails for a continuation down onto the trend line, and also potentially onto 40.50. If that gives way, then obviously you may even just spike down to 4,000 as well. So big week this week. You're going to need to be careful. You need to keep a position size really, really small, and stop loss is really tight. So you've got the Feds coming out on Wednesday, so expect volatility until Wednesday, possibly just ranging about in tight ranges or even forming a big triangle. And then you have non-farm payrolls on Friday as well. You've still got a whole host of earnings coming out this week. So cautious trade is the best way to do this right now. So for me, probably 15 5-minute charts are the ones to trade. And of all the instruments that I trade, there are one or two forex trades on Euro USD and USD JPY, possibly on British pound, Japanese yen as well. But then, the S&P would probably be the one that I'd be paying attention to. The DAX and Wall Street just don't look not that much decent volumes, firstly, and then the second thing is it's not much decent structure. So anyway, that's kind of my view today. Probably a 5 or a 15-minute time frame. For me, it is a public holiday here in South Africa, so I'll have the time to actually sit down and see what's going on. And maybe if we can get another move like this on the 5 minutes, we keep scaling in on a downward trend and make some decent money. Anyway, that's kind of my view today. I hope it helps, and we will catch up with you tomorrow morning. Cheers for now.